In last 8 years of me trading, I've tried hundreds of trading strategies, I've backtested thousands of trades, and there's one thing that I've learned from all that. It's literally all about learning how the candlesticks move. Now, candlesticks tell you the whole story. There's literally the start and the high and low tensions and the closing climax of the full movie in every single candlestick. And because of the experience that I've acquired in the last 8+ years, I was able to use this information to make $16,000 almost in less than 90 minutes at the market open today. And in this video, I'm going to give you this whole thing for free because I really wish back in the day when I started trading, this type of information was accessible for me. So my goal now is to make this high quality and high win rate strategies in the systems accessible for every single trader who's starting out. Because once you master this price action, which is a study of candlesticks and candle psychology, you can easily achieve a win rate of over 90%, doesn't matter what strategy you're using. But for that, let's understand the most important concept, which is candlestick. Now, if you pay attention to this is what candlesticks look like. This is literally the only type of candlesticks that are actually present in the market. Now, the first most important one is called very bullish candles. It's essentially just where the candlestick starts. It makes a big move towards the upside and closes here. Now think about if there's a critical level sitting here. The critical level got chopped straight away. Then comes the second type of candlestick. The second type of candlestick is kind of bullish, but still not as bullish. The reason why, the prices were pushing towards the upside. It got to a point which is the highest point right here. And then the sellers were able to take over and they pushed the price down a little bit and the candlestick closed. It's still bullish because the major chunk of this candle was still controlled by buyers, but still a little bit bearish action as well. And then comes the less bullish, and then comes the less bullish, and then comes the less bullish candles. Why? Because candle opened here, it pushed the price towards the upside, and then the sellers took over and they pushed the price towards the downside. It closed here. Now think about it. The buyers had so much control, but who had the most latest control here? Before the candlestick closed, who had the most latest control? Is the sellers, because they pushed the price towards the downside. Now buyers are the one who pushed the price up, sellers are the one that pushed the price down. Think about it. If nobody wants to buy your property, the land that you're trying to sell, what happens? There's no buyers. That means you're the seller and you're desperate to sell. You will keep on bringing the price lower and lower up until you meet that buyer. That makes sense? It's just demand and supply. It's that simple. And this is the most least type of bearish candles. And it works the other way around as well. I'm not going to explain the other way around. It just works the other way around as well. Now comes the neutral candles. Neutral candles essentially just simply means, let's say if a candlestick opens right here, the prices pushes towards the upside, the buyers are available, and then the sellers took over, they pushed the price towards the downside, and then the buyers took over again and they closed the candle like this. Now think about it. It opened at $100, went to 102, came down to let's say 99, and then closed again at $100. That means at one point the buyers were available and they pushed the price towards the upside, and then sellers took over, made the price to go towards the downside, and the buyers took over again. These type of candlesticks usually just look like this, with a wick at the top and a little body, and that's it. And those type of candles are called doji candles, D-O-J-I, doji candles. Now, you need to watch this every single day when you're watching the market. Super important. So now once you understand the candlesticks a little bit, you will fall into a trap of overanalyzing charts. Because once you do that, man, it's only downhill from there straight away. So you need to understand where to read the candlesticks and when to read the candlesticks and when you can just simply ease and chill. One of the most important times to watch the candlesticks is when there's some sort of divergence in the market. Now, what does divergence means? Divergence simply means when one of the names is moving towards the upside while the other name in the same sector is moving towards the downside. Now, one name is strong, the other name is weak. Let me explain. So now think about it. SPY is 500 top companies altogether, the average of top 500 companies. QQQs is average of top 200 tech companies or something like that, right? Anyway, basically QQQs is tech, SPY is overall the whole stock market in a way, right? So if SPY is, let's say, a little bit not as strong while QQQ is super strong, you need to ask yourself, the tech sector that is sitting in SPY is pushing the price or holding the price at least. And if the tech sector literally had a little bit pullback, SPY is going to go down like this. Now, I know it might be a little bit confusing. I will repeat it again. Think about this. QQQs is tech. SPY is tech plus all the banking sector and everything. Okay, so let's say if tech is pushing towards the upside like this and SPY is holding. Okay, it's holding one price action. It's not moving as fast. Now you need to just ask yourself, there's two type of runners in the market. There's two type of runners. There's two type of people who are jogging on the road right now. One is Mr. Bob, and he looks like a blob. All right. And the second one is, let's say, super fit guy. Now think about it. They're both running. They're both jogging. Who will get tired first? You tell me. He will get tired first, yeah? Okay. What happens? What happens if after, like, let's say 20 minutes, this guy's like, man, I'm tired. This one is like, man, I'm tired. What do you think is happening with this guy? He's out of the picture. He's like, you can't even, I don't even know if he's alive anymore. You see what I'm saying? Why? Because if something that is super, super fit and is pushing big time, if that gets tired and starts pulling back, something which was already tired, bro, or already looks super weak, it's gonna reverse really quick. And whenever something like this is happening, that's called divergence in the market, or also called relative strength, relative weakness, comparing to each other. You understand what I'm saying? And that was exactly what was happening in SPY today. Check this chart out, right? SPY was pushing towards the upside, yes, but at the same time, check this chart of QQQs, all right? Check this chart of QQQs. What do you see here? This is QQQs, right at the market open. QQQs broke above the yesterday's high. It broke above pre-market high. Is pushing towards the upside right here. While we have SPY literally holding this pre-market high area so well. We were not able to break above the pre-market high whatsoever, while QQQs broke above the pre-market high big time. So now you are able to understand that there is some sort of divergence between these two names. One of them has been able to get out of the range that we were watching. The other one is still stuck in the range. Now, if this one got back in the range, this one is going to melt. That's the whole idea of this. Now, once you're able to understand this divergence and you understand the candlesticks, now it's time for us to put all of this into practice. And you will see how quickly you are able to pick up the information that I'm about to share now. Let me show you the trade. But for that, let me talk about the first trade that I took today, where I took a loss, Amazon. And this is such an important trade, man. Like, look at this Amazon trade, right? It's making a big move towards the downside. Now think about it. The candlestick structures that I explained before. What sort of candlestick do you see here? Is this a bullish candlestick or a bearish candlestick? It looks super bearish candlestick. The reason why is because this candle opened here, it pushed towards the upside, and then the sellers took over and they closed like this. You see this candle right here? And where it went back and retested, there was a pre-market low and the 200 moving average on an hourly chart. And that tells me it's clearly super bearish and the prices are pushing towards the downside. Now, I'm a sort of trader, I like to wait for some sort of a pullback, right? Otherwise, I'm not jumping in. And then I got the final pullback that I was waiting for. It's literally right at the bottom. Look at this, 230-ish point. I got the pullback to the critical level. I was like, you know what, let me jump in, and I'm expecting the prices to hit this roughly this zone. And every single line that you have on your chart is always a zone. It's never an actual line. The reason why every single line is a zone is because think about this. If I draw the level at 228.9, somebody sitting on the other side of the world had drawn the level at 228.92, and my friend AP has drawn the level at 228.95, and somebody on the other side of the world had drawn level at 229. Now all that becomes a zone. So nobody's watching the exact to the cent levels. Everybody's watching a level which is kind of like a zone, right? So what happened on this trade is I decided to jump into puts, and I'm expecting prices to come roughly in this area. Now you might be like, bro, everything looks good. Why did you take a loss? I'll tell you why. It made a big move towards the downside. I was up like 20% already. The moment it went down right here, I was up 20%. It got into my zone. I was about to take profits, but somehow, now you were going to be like, oh, what a little whinger, right? I'm not whinging, I promise you. I was tapping the play in the chat, the way we're going to take profits. It was such a quick move. As soon as the candlestick opened, it went down. A lot of my students, a lot of my people who were watching my screens, they actually took profits while I was still tapping the play. Again, sometimes it backfires, it's okay. I missed the exit, and then what happened was it went and bounced and hit my stop loss. Now, am I mad about this? Yes, I am a little bit. But I missed the exit just because I'm typing this stupid little message. Look at this. Bro, I'm so pissed. I'm like, Amazon, tapping plays made me not able to take profits at the bottom. Fuck this. You want to hear what I'm trading? Jump on voice. But it was absolutely beautiful trade. I had a solid reasoning for it. And then comes the second trade, which is kind of leaning into this trade, which is called the SPX. SPX, absolutely love trading SPX. And the reason why I love SPX is because same price action theories that I was able to break down before, same candlestick theories that I broke down before, and the same divergence theories that I broke down before was the same theory that I used in this trade. And I use 5-minute chart. Now there's 3 different time frames that I use for trading. I use 2-minute chart for first 30 minutes of the market open, that means 9:30 to 10 o'clock. Then I use 5-minute chart for 1 hour of the market open, which means from 10 o'clock to 11 o'clock. And then I use 10-minute chart after 11 o'clock to rest of the day when I'm trading. All right, so now the trade that I took on SPX was on a 5-minute chart. And the reason why I took this trade is because prices were approaching this critical zone that I was watching, which is 66.50. 66.50 is such a huge whole number. Every $50 mark is considered a dynamite level on SPX chart. Anyway, now watching this, I'm on a 5-minute chart. I'm like, okay, let's see if the prices do a little bit pullback. Now for this, I need to see some sort of weakness. Otherwise, I'm not jumping in. The weakness, essentially what I'm trying to say is I need to see one of these candlesticks right here. You see these candlesticks? I need to see some sort of these weakness, some sort of this less bullish candlesticks, or some sort of this weakness candlesticks right around the critical level that I'm watching. And I'm watching the 66.50. And now, not this. I'm still waiting. Prices pushed up. Prices pushed up right here. I saw some sort of weakness candle. This is like a neutral candle that I explained before, right? It's some sort of weakness because the trend overall had slowed down, which is why we got a neutral candle. And I'm like, you know what, man, this looks nice. Let me jump in. I'll put a stop loss literally on the top. And I decided to jump in. And what happened was, boom, my stop loss got triggered. I jumped out. I was like, fuck, it is what it is. No stress. That's fine. Having a trade hit your stop loss is totally fine. But what's not fine is you holding on to the stop loss and the small loss becomes such a big loss. Then it starts affecting you emotionally. That's something that I do not ever do. Now, after my second trade on the SPX got triggered, which is the stop loss got triggered, I was still reading the candlesticks. And then I saw the price action still getting weaker and weaker. Now, even though I took a loss on the previous trade, you gotta treat every single trade as a new trade because the old information doesn't exist anymore. The previous loss has nothing to do with the current trade that you're about to take. I'll give you an example. Let's say if you toss a coin 99 times, every single time it landed on heads. You tell me what are the chances of the 100th coin toss that we're about to do to be heads or tails? The odds are still 50-50. Why? Because the 100th coin toss has absolutely nothing to do with the previous 99 tosses. Now, before I break down this final trade, which made me so much money, all my losses were able to recover, you need to understand that in this type of market, prices are all-time highs. You do not have levels setting up at the top. This is where the skill set of price action and reading candlesticks really come into place. Now, all this information that you're just acquiring has to be used very precisely in the market. Otherwise, you're going to end up overdoing this stuff and giving the money back in the market, which is where I don't like to say this over and over again. I genuinely believe KC is the best thing that will ever happen to traders. KC is my mentorship program where you get to watch me take these trades live in the real time, step by step, where I'm literally explaining the whole thing in the real time. It will take you from each step of the process with extreme detail, and inside you have the private community where you get access to 24/7 coaching from me and my team, like bunch of millionaires, and you get a private weekly coaching call with me personally every single week. If that stuff excites you, check the first link in the description box below and let's make it happen. Now let's talk about this SPX trade, which nearly made me about $20,000. Now previously I had lost about $4,000 or $5,000. This SPX trade made me over $20,000. Now let's talk about it. What happened here is I'm watching this chart. It's still moving towards the upside. And what happened on a 5-minute chart, I saw some sort of weakness. Now I didn't even wait for this candlestick to fully form. Now think about it. There was a time in this candlestick where the price action started looking like less bullish. Do you see this? At one stage, it looked like this, then it looked like this, and then it totally went and looked like this. That's so bearish. And initially, when I saw this, I was like, oh my goodness, this looks really nice. Especially at the same time, we have this QQQs looking weak because I'm like, SPY is still stuck in its pre-market range. QQQ broke above this. If QQQs fell into the range, SPY is gonna melt. It's gonna go down to the VWAP. VWAP is the volume weighted average price. Volume weighted average price simply means based off the volume, that should be the price right now. That means this is overextended a little bit. You understand what I'm saying? And if you want to set up the VWAP indicator, just go to the indicator tabs and search VWAP, volume weighted average price. Just click on this once. When you do click on this and then go to the settings of this and make sure your settings are exactly this, H plus L plus C divided by 3, nothing else. Okay, this is the most important one. and have the settings exactly like this. And make sure you do this because it's so freaking important. And I'm sitting there, I'm like, oh my goodness, this looks insanely good. And then, you know what I did? Because 6650 is sitting there, I was like, if it breaks below 6650, I'll jump in big position size. For now, let me do a small position size because 6650 is such a huge whole number. And then prices went down like this. Check this out. Made a big move towards the downside, went and touched the VWAP, the actual level that I told you before, and we decided to take profits literally right at the bottom. I mean, check this out. There's a little video that I'll play, all my people taking profits right at the bottom, and every single person took the play with me. It's absolutely insane. Like, check this out.
Let's go! Yeah! We got this entire move and took profit taking right at the bottom. Look at that shit turned around, bro. So fucking sexy.
When the prices were moving towards the downside as it broke below this critical trend line that I drew in the pre-market, as you can see right here, I even sent this in my chat that if the prices do break below this and then retest this, it will be a nice add. And that's exactly what happened. It broke below, retested this. That became another entry that I did, made a big move towards the downside. Now you might be like, why am I watching sometimes SPICE chart and SPX chart and I'm trading SPX? Because they both move together. It's literally the same thing. And I watch both of these charts in order to get my win rate higher. And that's why it's so freaking important to add to your winners so your winners are always bigger and your losers are small. Now, if you enjoyed this video, make sure you subscribe to the channel and I'm out.